Good evening, good morning, good afternoon to wherever you are in the world. Welcome back to the final countdown. I'm just kidding. Welcome back to another episode of the Coffee Hour. All right, today is Friday. Thank God it's Friday because this week has been absolutely insane, right? Absolutely insane. I mean, we still have a lot of stuff kicking off in the broader world. Mostly it has to do with, of course, Iran. So today's stream is going to be probably a little less news driven because just everything is covering right now the news that's happening in the Middle East, right? Everything is revolving around oil. We had some jobs data that came out, so we'll take a look there. We'll watch a couple clips here. We'll probably showcase one stock that you know I've held on DAS, but they did win a big contract, so I'll share some thoughts there. Yeah, today's stream is going to be pretty mellow. Like I said, it's Friday, and pretty much all the news is centering around just what's happening in the Middle East. So give me a few seconds here. Gotta get this all set up. But yeah, how's everyone doing? I hope you guys are doing well. I see we have Victor Sank in the chat. I also see that we have Padre in the chat. Let's see. We also have Sean Lively. Well, hey, welcome back, Sean. Or is that Sean Shively? I believe it's Sean Shively. Hope I'm pronouncing your name correctly. All right, so appreciate you guys for joining me on this stream. I'm going to go ahead and drop this. Oh my God, my monitor is like being destroyed right now. I think I'm gonna have to put her down, guys. I think I'm gonna have to put my screen down because it keeps shutting off. All right, so we also have Oak Unathletic. Hey, welcome back. I'm gonna put the link to the StreamYard if you guys want to come on as a guest. Again, today's gonna be kind of a chill session. There's just most of the news is just covering Iran stuff. Like it's hard not to cover what's happening over there. And of course, my monitor is just going ballistic right now because why would it? Why would it stop? Let's see. Pause this right here. Absolutely crazy nonsense. All right, share, post this. All right. Okay, that's not what I wanted to show. Let's see if we could try this one more time. There we go. Well, I'll tell you what, I'm glad that this week is over. This has been a crazy week, to say the least. I mean, we have, I actually just got a text message from some friends, and I just got a text message from some friends that are pretty much on, I won't say on the front lines, but you know, they're at one of the camps, and you know, their sleeping location was hit. So not something you want to wake up to, right? Yeah, thankfully everyone is okay. But yeah, the war is heating up. You have China and Russia backing up the Iranians. Okay, guys, let me get into this. All right, let me get into this stream. Like I said, absolutely just insane what's going on in the world, and my screen just does not want to cooperate with me. So I'm hoping it doesn't shut off mid-screen. Let me remove this real quick, and then we'll get to it. So apologize in advance if this setup is taking a little longer than usual. I was trying to look for like actual, you know, actionable news, like actual, you know, news that could be helpful. Didn't find too much, like I said. All right, so here we go. Dead air stream. Let's go. All right, let's go, baby. We got dividend, retire on dividends in the chat. Hey, welcome back. And of course, Sean said that the E is vowel. All right, well, I will try to remember that. You know what? I'm just going to call you Sean. How about that? I can call you Sean. Oak says, love the stream. Appreciate you joining as always. All right, guys, let's get into it. My screen is blowing up over here. It keeps shutting on and off. Okay, so for the heat map, you guys can see just not doing so hot, right? I don't know about you guys, but I am tired of all this winning. I am certainly tired of all this winning. There's a lot of stuff going on in the Middle East, as you guys know. Right now, the current situation is Iran wanted to make a deal. Then Iran said that is not true. Then the U.S. said Iran wanted to make a deal, and then they rescinded. And then the Trump administration came out and said they will only accept total surrender, right? Of course, Iran's not just going to totally surrender and embrace democracy, right? That's not how any of this works. And then there was some news that basically the son of the former Shah that was ousted out of Iran back in the 1970s, he came out and said, hey, you know, I will be the transitional leader. I've accepted the position, as if it's already been decided. So a lot of nonsense happening in the world, a lot of nonsense. You had a couple tankers that were targeted. The Strait of Hormuz is open, is not open. Then they said, the Iranians said, hey, you know what? The Strait of Hormuz is open to everybody except the United States and Israel. So, you know, they're going to allow shipping containers supposedly to go to and from. You had the Trump administration saying, hey, you know what, we will we'll match, you know, your insurance policies for those shipping containers, so we can start moving oil to and from. You know, again, there was a supposed U.S. shipping container that was hit, and that hole, I don't know if you've ever seen a shipping container in person, but they're massive. And there's a big gaping hole on the side of this ship. It was hit with a missile. So again, crews don't exactly want to traverse the Strait of Hormuz right now with insurance or without insurance. It does not matter, right? Of course, Palantir, of all the software companies, you know, is doing pretty well, right? You know, they're part of what's happening over there. They have a leg in the or some skin in the game, right? Backing up the Department of Defense or the Department of War out there. Nvidia down 3%, Apple down 1%, Google down just 78 basis points. Amazon had a data center hit, as well as Microsoft. Microsoft and Amazon both had data centers hit in the Middle East, right? No idea what the complete damage is, if those data centers are going to be complete write-offs, because that is a possibility depending on how bad the damage was. All right, so Amazon down to 2.6% for the day. I think we have Sergio in the chat. Coffee time. Hell yeah, man. I got my coffee right here, and I appreciate Phil for the super chat, and I also appreciate Farouk for the super chat. This is what paid for today's coffee. All right. Today's coffee is, I believe, a breakfast blend from Starbucks. All right. And I do appreciate everyone's support. All right. I really do. It does mean a lot. Let's see. Sergio says, Skeptic, we are recovering from the red candlelight. You know, there's a meme out there saying, hey, you should do some, red light therapy. Well, this right here is my red light therapy, just opening this up. Okay. Let's move on real quick. Okay. So anyways, and I see your message, Victor. So we'll open it up here in a moment. Okay. So anyways, financials down, credit services down, pretty much everything is down for the day, right? Software actually doing not too bad. All right. Up, 36 basis points. So let's move on. So the S&P 500 for the week, all right, ending the week down 1.24% for the day. That counted for most of it, down 1.33%. Okay. Anytime the index moves up or down 1%, that's going to be either a really good day or a really bad day. And in this case, it was a pretty bad day. All right. There seems to be no end to the conflict. And as we were talking about oil and how it impacts the global economy, how it can increase goods and services, because everything uses oil or some type of energy, right? And right now, 20% of global shipping of that energy is not happening, right? Or that region is being contested. So definitely going to be continued volatility until some good news comes out from that. For the tech sector, specifically the software sector, looks like we're doing A-okay. We are up almost 10%. I had the ETF inflow data, and I totally forgot to show you guys yesterday. But I did want to show you that IGV looks like it's starting to have its time in the sun. Of course, it's still down a substantial amount, but over the last 5 days, it's up 9%. Year to date, still down 14%. And then if we look at its, last all-time high, we could probably use, we'll use October. So we use October. It is still down about 24%. So, could be a potential nice addition for a swing trade if someone is into that thing. Here's just the quick flows for IGV. And again, this is just showing that a lot of, people are flocking into software and taking advantage of that dip. All right. So this is the flow chart for IGV, meaning this is the inflows of money into IGV, into the ETF. So you see that we had these really big drops March 2nd, February 17th, and February 11th, right? And then people were just buying the dip like crazy. So that to me is a good sign. It is a bullish sign, in my opinion, that, risk on is coming back very slowly, right? But we still have the geopolitics stuff popping off. All right, for gold. Okay, gold had a pretty good day today, and gold has not, it had this really bad drop, right? This was right after the strikes happened or started over the weekend, and then into the week, right? I would have thought that gold would have had a really good week because of the geopolitics, the uncertainty, war, etc. But instead, Bitcoin was actually the one that took a lot of the money away, right? And it sort of makes sense. I mean, when you think about it, we just had the UAE cut off Iran from or thinking about freezing their assets, right? Imagine the amount of money that's about to be frozen, and that's government money. But it won't be far-fetched to think that, there's going to be runs on the bank in Iran, and then where are people going to flock to, right? They're probably going to put their money in something like a cryptocurrency or something like a Bitcoin, in my opinion. Okay. We've seen this happen. We've seen this happen in Syria. We've seen this happen in Russia, where people will just start dumping into, something you stick on a thumb drive, put in your pocket, hop on a plane, and then cross the border. Right. So that is my opinion. I think that's why Bitcoin had such a huge spike over this week. But of course, we were starting to see it come down a bit. But this is gold's price over the last 5 days, negative 3.45%. For the week, still up 1.58% for the day. Year to date, still one of the best performing assets. All right, still up 18.89%. All right, GDX, which we don't really cover on this channel as much, but it is a position I did have. And I use that past tense because I don't have it anymore. I'll probably look to re-enter later, or look to re-enter into a different ETF. But, Victor / Padre had put in a good comment, something that was pretty thoughtful, I think, right? So if we're looking here, we see that we had this run up, right? Really crazy run up. Nice. But as we saw on Monday, this massive dip, right? Why would the miners be selling off? And of course, you have to tie that back to the energy needs that these miners need in order to mine the damn metal, right? So oil, again, gasoline, energy is needed for these miners. And of course, they sold off, right? And they continue to sell off. You would have thought, at least I was thinking, that gold miners, silver miners would be doing well, but that is not the case, right? As a matter of fact, silver had also a pretty decent day along with gold, but over the last 5 days, it's down still substantially, right? And then it's the same exact reason for the SIL ETF, the silver miners ETF. All right, you still need a lot of energy to go mine this or to go mine these metals. It's not something that you can just dig with your hands. So that is. That is just a case study of why oil is so important and the impacts that it does have on kind of the greater world, right? On other sectors, other other themes, etc. Like oil is pretty damn important. I have never understood fully how important oil is until this event, right? Until this event started to occur. But I mean, you have everything. It doesn't matter even if you have an electric car or a gas car, right? Both need oil or / energy, right? And those costs are going to go up. Right now, I believe I last saw that a barrel of oil is trading at about $90 to $100 a barrel. And I saw another report that for every $10 that oil goes up, that adds to CPI, that adds to inflation, right? That adds to inflation because of the energy needs of manufacturing, the energy needs of services, the energy needs of, to produce, goods or whatever. So if this continues, right, and its potential to impact the global economy, if this continues, we could potentially see a reintroduction of inflation back into the U.S. economy, which is not going to be a good thing, right? That's going to spook the Fed. The Fed's not going to want to lower rates. And we also had some jobs data that came out that didn't look too good, right? But depending on where you are, if you believe in, government numbers or not, either way, it does not look good. So Sean says gold or GDX follows the price of gold. Yep, it does. That is true. Not just energy, says Padre, mainly diesel, but the acids needed to turn it into 0.999 pure gold or pure silver. So there we go, guys. Like if we're looking at, I'm skipping ahead, but if we're looking at oil, this is oil over the last 5 days, up 24%. All right, up 24%. We see just for today, up almost 13%. Okay, year to date. Now it is the best performing asset year to date. Who would have thunk it, right? Who would have thunk it? But oil is now the best producing asset, or the best asset year to date. On the chart, we have Bitcoin here. And of course, Bitcoin's also going to get impacted because Bitcoin is tied to energy. You need energy to mine Bitcoin. You need energy for Bitcoin. And as the cost of, energy goes up, that's probably bearish Bitcoin, right? That's bearish Bitcoin miners or crypto miners in general. But year to date, still down 20, almost 22%, right? Looked like it was going to get a nice little leg up, hit the 70 range. And then, it just promptly fell back down. All right. Because there just seems to be no end in sight for this conflict that's happening in the Middle East. So I just want to check the chats real quick. All right. So Super Straight Guy says, I don't think either side wants to pass the Clarity Act. If it doesn't pass, the thrill continues for Bitcoin. We're speaking on Bitcoin. So I did see an article, although it's very unfounded. There's no facts in it. It was just, a friend of a friend who knows a Washington insider. So it's probably, some kind of fake article. But they were saying that it's a high possibility that this Clarity Act gets passed by July. But again, I have not heard anything more official from that. Let's see what else we have. All right. Yep. We'll give Padre his victory lap. Don't check the commodity section for Invest Tribe to see who called oil. Yes, Victor did call oil about a month ago, if I want to be not mistaken. It was probably a month or two ago, but it was an early call for sure. So, if you guys aren't part of the community, definitely check it out. Link to get the link is down below in the description under Stay Connected. Okay. Let's see what else. All right, moving on, guys. So we covered U.S. oil. We covered oil. What's happening in the Middle East, and again, this is going to be a kind of a quick stream or quick news cycle because mostly it's about oil and what's happening in the Middle East, right? The Kobesi letter, came out with this: breaking the U.S. economy unexpectedly loses 92,000 jobs in February, below expectations of a 58,000 job gain. All right, the unemployment rate was 4.4%, above expectations of 4.3. All right, this marks just the second monthly job loss since the 2020 pandemic. The U.S. labor market is clearly weakening, and this is coming from the Kobesi letter. Again, depending on where you at, do you believe in these numbers? Not believe in these numbers? Are they going to get revised next month? Left to be seen. I think the market is just taking this in strides at this point. Again, it won't be far-fetched to start seeing pundits come out and say the numbers are wrong. We probably have more job loss or something to that effect. But this is not good, right? Why is this not good? Because this plays again on the Fed and the hopes of rate cuts. But we know rate cuts are not coming. We know they're not coming at least until Jerome Powell gets out of the seat. But in my opinion, and it's starting to probably look that way, rate cuts are not going to save us. Rate cuts are not going to save us from what's potentially coming. Again, Michael Sonnenfeld, founder of Tiger 21, it's a club or a network for very wealthy individuals. You need 100 million to be in that club. You also had Paul Tudor Jones. They were expecting that this year, 2026, is going to be an inflation year, right? You even had Kathy Wood say that last year, that this year is going to look like an inflation year. Could that potentially play out? It's still left to be seen. But when we're having jobs getting lost, unemployment, labor market starting to crack, if oil stays on the course that it is, it wouldn't be far-fetched to believe that is a potential scenario that could play out. So again, you have China and Russia both supporting Iran. They want to back up Iran without, military. Of course, they're supporting them by sending, spare parts, sending them, ordnance, and providing satellite imagery. That is, probably how some of these hotels are getting struck that have personnel in them. But yes, unless that conflict comes to a resolution at some point in the very near future, I could see the markets continue to get riled. CENTCOM, if you guys don't know who CENTCOM is Central Command. They're the ones that are pretty much coordinating the efforts in the Middle East. They came out and said that they could see this conflict going until September. Which is absolutely insane. So much for a quick turnaround, a special operation, as it were, to get the regime pretty much overthrown. Again, I mentioned it on the stream. Iran is not Iraq. Iran is not Afghanistan. Iran is Iran. They were a power player in that region. They are the regional power, and they are definitely not just going to take this on the chin. All right, so moving on, guys. We also had this come up. Yes, if Saudi, UAE, Qatar pull their investments from the U.S. market, it'll worsen the recession. As a matter of fact, I want to pull up a quick. I posted this in the Discord. I want to pull it up real fast if I can find it. But yes, I was curious what the impacts would be if Qatar was to remove their investments. Right? If Qatar was to remove their investment from the from the United States, right? And this is what at least the AI put out. So the AI said that the sector-specific consequences, aerospace and manufacturing, major deals such as the Qatar Airways $96 billion order for 210 Boeing jets are potentially at risk. Cancellations could impact hundreds of thousands of U.S. manufacturing jobs. You also have artificial intelligence and tech. Recent pledges, including a $500 billion Qatari commitment and Saudi AI initiatives, are critical to the U.S. reindustrialization and AI infrastructure goals. There's a potential that this could have a negative impact on, companies like NVIDIA, OpenAI. You also have Microsoft, Google, Amazon, and probably AMD's in the mix. Some of the semiconductor companies. So there's a potential for them to be impacted from this as well as defense. All right. A withdrawal could jeopardize multi-billion-dollar arms packages, such as a $142 billion agreement with Saudi Arabia, affecting dozens of U.S. defense contractors. All right. So that is, what is potentially at risk here when Saudi Arabia, UAE, and Qatar are talking about pulling their money, their investment away. Away from the United States, right? And that's obviously going to impact the stock market, right? You have Boeing, a huge manufacturer, of course, of planes. That would not be good, right? That definitely would not be good. 210 jets could just be stalled out, right? Of course, we don't know specifically what the arrangements are or what the agreements are. A lot of this is, best guesses at best. So we'll see as time goes on what the UAE, what the Middle Eastern countries are going to be pulling. I'm sure there will be news in the future. But yeah, that is a big deal. So Michael Anthony says that won't happen. That's all rumors. Well, that's not all rumors, because there was a article that actually covered all three of these countries, or three of the four countries that were thinking of pulling their funding or pulling their investment because of all the volatility. Let me see if I can find that for you, because the article was, it was published yesterday, so I actually might have it in my news section. Let's see. Yeah, Gulf nations consider withdrawing U.S. investments, and this is coming from, well, not this one. Let's see. Yeah, so again, they were considering it. They didn't pull the trigger on it. Here it is. So just as a reminder, here it is. We already covered this in one of the previous streams earlier in the week. But yeah. All right, cool. So anyways, going on. All right, so I just want to watch two clips here. We have Jeremy Siegel. All right, I like to listen to Jeremy Siegel whenever he's on. He runs the Wisdom Tree. All right, Wisdom Tree has a lot of those really fancy ETFs. You guys can check them out. But he's, the Wisdom Tree is pretty well known. So let's listen in on what he has to say about oil and Iran. All right.
Professor Jeremy Siegel of the Wharton School.
And please let me know if you guys can hear this. All right. I'm pretty sure I hit the right buttons and I won't be on mute this time.
Professor of Finance. It's good to see you, Professor. Welcome.
Welcome, Scott.
All right. Yeah, so you've had a chance to absorb a week, right? We've had a week.
Yeah.
What do you take from it?
I'm very cautious. I say if we don't get some breakthrough over the weekend, I think we'll see $100 oil next week. And remember, it began the year under 60. I mean, that would be if we do get that, that's a 70% increase in price. And that will set, I mean, I think gasoline is set to soar in any case. So I think there are headwinds. Now, your other guest thought that the tax refund might offset them, but I think that the oil shock actually could be bigger than what we get on the refunds, which were well advertised, and some people have probably already maybe spent their extra money. So I wouldn't be surprised to see a correction in the market. We haven't had one for a long time, and I mean, that would be, we're not even in the pullback zone yet, which is 5 to 10%. Correction is 10 and more. I don't think any bear market is coming. And by the way, I mean, if we get a breakthrough, this we would get a coiled market spring upward. But trends look like this is going to drag on a lot longer than I and the administration had hoped.
Oil matters more than everything else. That's what I hear you saying, correct?
Yeah. In the short run here, oil does matter more than anything else. The price of gasoline is probably the most visible price of any price in the consumer basket. We're in a midterm year. Politicians are going to make an awful lot of it one way or the other. The Democrats themselves didn't like this war. They're going to blame the high price on gasoline on Trump. So there's going to be a lot of fighting back and forth on this issue. And, it's from what I've talked to some oil experts, and the shutdowns, what is going on in the Gulf, what is going around the world in terms of shipping. I mean, it's cannot be fixed overnight. It's going to have some lasting effects, at least in the near term on the economy. In the long term, I'm as bullish as ever. So don't believe that. But I do think that what I see short term does worry me.
But outside of oil, what inside the market is most concerning to you? What group? Is it the banks? Is it the private credit related names? Which ones?
Well, I'm bullish on everything. I mean, I actually was a little puzzled about the.
I like how right here in the headline it says Siegel very cautious on market, but he just says, no, I'm very bullish. Anyways, just to summarize some of what Siegel is saying, we're going to bring Tungsten Tiger, aka Padre, aka Victor, onto the show here in just a moment. But just to kind of summarize, what he's saying, that if this conflict doesn't get resolved, he could see that there's going to be a lot of short-term volatility. Again, oil drives a lot of the market, right? He could see inflation also being a potential scenario as well. So let's skip the rest of this clip because he's just going to continue on talking about the impacts of oil and Iran. Let's bring on Tungsten Tiger here to share some of his thoughts on what's going on. And to answer a quick question I see from Sergio. Did you see the news about Russian oil taxis from the U.S.? I think I got that correct. So two things are happening. One, the United States is, not, so they're basically allowing India to purchase Russian oil, right? Because energy costs, right? And India gets a lot of energy from the Middle East. So they're allowing them, if I can even say, if that's even the correct phrasing, to allow India to purchase Russian oil. And then also, there was also some other news. There was another country that, the United States is also going to lift sanctions on Russian oil because of what's going on in the Middle East right now. So again, you have the United States capitulating right now, a lot of pressure being put on the United States government for the conflict in the Middle East, for the conflict against Iran, because that's pretty much destroying a lot of the world economy, starting to spike prices. I know in some countries, they have probably a couple of weeks to at least a month or two worth of oil reserves until oil can start flowing again. So anyways, with that, hope that answers that question. And we have Tungsten Tiger, aka Padre, aka the Victor, here on the show. Welcome.
Hey, how you doing?
It's another day, brother. Another day.
Yeah, I mean, a very interesting day. I think for not just the market. I had a very interesting day myself. I think you guys saw in the comments. I've been stung to high heck from bees today, but all in all, very interesting in a world sense and in a personal sense.
Yeah.
What we got going on right now, I just wanted to explain to a few people in terms of why there's some misunderstanding in the markets of where gold is going, where silver is going. You did touch on it there for a moment, and just to reiterate of the prices of all the commodities, of what gold and silver and copper and any of these extractive commodities use, it all requires input in order to be able to extract. So any of the diesel used for drilling, any of the acids used for metallurgy, all of that stuff is going to cause higher cost in the overall all-in sustaining cost for any of these miners. So just of what people are on the outlook for. However, there is still a very high commodity cost overall for what these metals are. So in the disparity between the two, there are probably some very good, very cheap miners right now. I have a multitude of names which I could go ahead and run off to people, but I would rather suggest they go ahead and check out the group and check out the different sections so they can go ahead and find whatever it is that actually speaks to them. But there's potential for even more of that coming, I think, forward here if we see advances in what's going on in the macro situation in the Middle East, then when we might see prices rise even more so. So to also be cautious with how much people are entering into positions. You're the only one who can control, the amount that you enter into a position with. So of thinking that, well, where we're at right now and of the positions or sectors or where you want to be, of saying, well, if we're going to see all of this job loss, all of this increase in prices across sectors, then people are probably not going to eat out as much. People are probably going to be, restricting travel maybe so they don't use as much gas, all of these other things that are going to affect, consumer discretionary spending and other areas that will kind of ripple throughout the rest of the market. So how to be positioning yourself, how to be allocating your capital at a point in which, you want to be buying when the market is bleeding, right? When there's blood in the streets, that's the saying but buy the blood, even if it's your own blood. And if you have the ability to do so, though, which means you really want to be knowing that you have the ability to do so. So many people are fully invested right now. So many people don't have dry powder on the side in order to be able to deploy when they need for that, or when they, rather when the time would be the best appropriate for their capital to be put it to work, because there are so many unknowns, as Rumsfeld, who used to put it like that, of no knowns, unknown unknowns of what you could have coming forward through the marketplace. So there are no knowns, though, which is if you're looking at fundamentals for these companies, if you're looking at some of this other stuff, that you should really go ahead and drill down of your checklist of the things that you're going to be wanting to buy in the future, and then nibbling in, I suggest, in a barbell like approach. Anyway, that's my rant for the short time period. Again, lots of venom coursing through my veins. So just to
No, I mean, you brought up a lot of good points. I myself am holding a ton of just powder, waiting to deploy it. I'm trying so hard. I'm trying this new thing called patience, as you know. And I'm in full agreement with you. And you brought up a lot of other interesting points. One of them being that as the cost of energy goes up, especially with oil, right, it's going to impact, the economy, manufacturing, et cetera. But people need to still drive to work, right? And if the cost of oil, gasoline goes up, right, they're not going to be eating out as much. They're not going to be spending as much. You still have to heat the home. You still have to pay for electricity, all that stuff, right? So as those costs go up, people are not going to be eating out more. That's going to start impacting, the economy, retail, right? People are not going to be buying as much. So again, the ripple effects, the ripple effects from oil going up cannot be stated enough, right? You absolutely hit the nail on the head, and thanks for sharing that with the audience, because that's exactly it. When oil starts to increase, the whole world runs on oil. Like, that's really it. They don't run on anything else. You can't mine gold without oil. You can't run a car without oil. It doesn't matter if you have electric car or not. You can't have the lights on without oil, or some type of energy. Data centers, that's a big one right there. Data centers are also going to get impacted from this.
Yeah, well, you don't have to power
costs.
so many of those these days, seeing as how there's less and less over in the Middle East as time goes on. Not just Amazon, but Microsoft, data center after data center. People got to start, I don't know, I think positioning themselves for what could be an even larger downturn. We saw all of the bonds, right? People don't like the bond market. The bond market's not sexy. But what we did see was in the entire world of the bond markets all go up in the same time. That should be a red flag to everybody. That should cause your butthole to pucker and say, what the was that? Like, just there's enough to where whether it's the short-term treasuries, whether it's long-term, it doesn't matter in the regards of that. If all that is happening at the same time, and of what it is that your investments are, like, I think people really need to do a good hard look at what it is that they're owning going forward, really knowing what you own. It's an old lesson. It's not exactly like I'm saying anything brilliant here, but of examining their portfolios and saying, how much of this do I actually really want to ride through this potential turmoil of what's coming up here? Whether it's, Orange Man does something or the rest of the world reacts. We have so many more retail in the space. Like, there used to be a bunch of people who would just say, hey, guy, you know how to manage stuff. You know how to buy stocks. You do it. And they would give their money to a manager to do it. Now, there's still plenty of that. There's still plenty of people who, for some reason, trust, Jay Pestrzelli to go ahead and take their money from them. But of the reality, we have so much more retail into the market space, which is also so much more reactionary. So of the fundamentals of being able to read a chart, of those things, they have actually less significance than they used to back when Warren Buffett was talking about, hey, here, you should understand the fundamentals, because it is so much more now based upon sentiment and feeling. And the market and people these days, I think, are way more emotional than they should be. And so we're going to see that reflected in the market space. And what used to be, a good earnings report, and you'd see, I don't know, a 4% increase or something, we now see 50% increase on a good earnings report. It really has nearly become, no offense to the Chinese market or the Asian markets, but a little bit more like that, where we see these absolute nonsense plays of things shooting to the moon and then coming rocketing back down. We go, I don't want that for my marketplace. I don't want that for my money. I'd like to be able to find a good company that makes actual money, that has free cash flow, and that is going to be looking good into the future, but also not necessarily have to be one of the dividend kings like Johnson & Johnson. And now, granted, that's not a great example because they've had very good returns over the last year in not only stock price, but, appreciation of dividends and growth in that respect. But just of where you have to put your money if you have enough of it, right? You want to protect it once you get to a certain point. Generally, younger people are okay with risking a hell of a lot more, but the people who've allocated enough capital and have 5 different portfolios, not because they want 5 different portfolios, because you're only guaranteed so much money in each portfolio, right? If you only have a 500,000, well, you better have an E-Trade account. I don't want an E-Trade account, but you better go ahead and have something. So you go ahead and protect along each of those, only insured for X amount of dollars. So there's everybody's looking at this differently, of where your age is, what your risk acceptance is, and, what you want to do as an investor, who you are. But,
I heard a really interesting comment that this is right now because of what's going on. And it's been this way pretty much since the start of the year, but this is now a trading environment right? This is not a buy and hold environment. The volatility is too wild. The swings are too wild. You know, a news drop, you know, can swing the market a couple percentage points. And you're right. Like you have Marvell right here. I have on the screen. I mean, this thing jumped up just in the last day, almost 20%, right? On earnings, just on earnings, right? Jumped up 20%, but we're having all these stocks doing these crazy moves up and down. And you're right. That's not healthy. That's not exactly healthy for the market. You know, what are your thoughts on that sentiment that this is now a trading market? This is not like, you know, a buy and hold, unless you can handle or stomach the volatility or the red days, the deep drawdowns.
You hit so many of the things like this is, I was just talking to my dad about this. We have so many things where you want to be in his position. He wants to be a long-term investor. He wants to be able to have good companies who have good earnings, who have free cash flow, who are able to pay out their dividend, not out of the actual earnings of the company, but rather they can be able to sustain that type of payment and grow that type of payment as well. But there's such a disconnect in the market right now, and that's why I use the Chinese reference, is that it is rigged in so many ways. There's so many, whether it is the retail is taken along for the ride. We're not by any means moving markets, but the ride that we're along for has so many people who are bad actors, right? If we wanted to look at where all the private capital, BDC type stuff, Blue Owl just got, you know, its butthole blown out by the amount of stuff that people are putting out about it. It's like, okay, well, Howard Marks had a great letter he wrote about that. I mean, I don't know how many people are familiar, but they should be familiar with Howard Marks if they're investing. And saying, okay, there's cockroaches, and generally where there's one, there's more. And so there are so many that have been, Howard Marks puts out a letter frequently, like monthly or so. And if you don't take that in, if it's not, something that is just people can peruse it, they'd rather, I don't know, spend half an hour looking for a video on Netflix that they don't even find. No, I'd say just dedicate some time to the people who actually know what the hell they're doing. And of the particular markets, he's one of the guys who I really like. He's, the video I sent the other day to you have been like, hey, man, there's only so many times where the market is a good place to invest. And of the times when the P&E gets to a certain level, and it's not me saying this is JP Morgan. This is a company that I think is a piece of shit. But overall, it's like, I mean, you pointed out the other day, Jamie Dimon's talking about a fair playing field. And it's just, he deserves Actor of the Year award for that. Either like both a Razzie and Actor of the Year at the same time. It doesn't make sense. It confuses me more than quantum mechanics.
But, hey, Victor, we have breaking news. Someone who came back from the dead. We have Julio or whatever his other 100 aliases is in the chat. Look at this guy, man. I haven't seen this dude around in a long time, man. I'm glad to see him. I'm happy to see him. I thought he just drove off no pun intended. I thought he drove off a cliff or something. Like he's been MIA for a minute. So that's awesome to see. Hey, Julio, if you want to come on, man, and tell us what's happening with you, man, your strategy, because I think some people would get some absolute value from what you have to say. Because for those who don't know, Julio is very anti high yield ETF, but he follows a completely different strategy. He uses SMH as pretty much a primary piece of his portfolio. And he does a lot of, basically cover calls. I mean, well, maybe not cover calls, but a lot of options trading. I think you'd be, if you have a message, if you want to get on, if you can get on, I know you work around this time as well. But let me know, and I'll send you an invite link as well, and we can get like a 3-way chat up on this stream. But yeah, going back to what you were saying, Victor, I also like to try to, educate myself and listen to these other people, like Howard Marks. I like to read some of the white papers that come out, from Vanguard or Fidelity or Schwab. I I think it is invaluable to listen to other perspectives. But again, it's, going back to that, because there, not too long ago, right? Not too long ago is on the other stream that, I was saying that if you're, an investor, you don't really want to, pick stocks. If you're brand new to all of this, something like an S&P 500 SPY VOO would make sense. And I saw that video. As a matter of fact, let's pull it up. And I saw that video where Howard Marks is basically explaining, like, being in U.S. equities, something like a SPY or VOO might not make sense because of all the craziness that's happening right now. Let me see if I can pull that up. It was in our community. It was in, I think, YouTube videos. Let's see, where is it? I hate Michael Saylor and Bitcoin Maxis. That video is still freaking awesome. All right, where is this thing? Where is it? Howard Marks. Hey, Victor, did you go ahead?
It was just a short of Howard Marks in a scatter plot that JP Morgan put out saying that it's either, +2 or minus of what you're expecting.
JP Morgan.
Yeah. Okay.
Yeah. Here it is right here. I found it. I was looking for YouTube under YouTube videos. All right. Let's listen in on what Howard Marks has to say.
Published a chart around the end of 24, and it was a scatter diagram showing over the years the relationship between the S&P 500 at purchase and the return over the next 10 years. It was a negative correlation, which means the higher the PE ratio you pay, the lower the return you should expect. Makes perfect sense. And it showed that historically, if you bought the S&P when the PE ratio was 23, in every case, there were no exceptions, your annualized return over the next 10 years was between 2 and -2. So all you have to know. One of the most interesting things about the S&P, on average, it has returned 10% a year for 100 years. But do you know that the annual return is almost never between 8 and 12?
Kills it or it
Dies. JP Morgan.
Yeah, so that was the clip. Just some of the finer points, or at least in my mind, right? Because he's talking about, as PEs rise and the S&P 500 returns are going to shrink, right? They're going to get smaller and smaller and smaller over time. I don't know if I agree with it. And I know he's Howard Marks. He's one of the best investors of our time, right? It's hard for me to believe it only because, we saw we saw the S&P 500, like we had the lost decade, right? We had the lost decade between 2000 all the way up until 2008, I think is pretty much the lost decade for the stock market, where we didn't see any real return. Most investors, lost money or didn't see the growth of their money. But it wasn't until the Mag 7 came with a vengeance, the internet age really took shape, and we saw that the S&P 500 climbed to new highs seemingly every other day, right? Let me see if I can pull that up real quick. S&P 500, we'll just do the max. So yeah, like you had this decade right here that was pretty much no return, right? 8 years of just no return. And then, you had the 2008, 2009 GFC happen. And then, this is really when the internet age took shape. Social media, Facebook, Google, Amazon, everybody else, right? It just drove us to these new crazy highs. So my opinion, just my opinion only, I think, what's going to drive this next leg up is going to be artificial intelligence. I hate to keep being that broken wheel or whatever, to keep, or broken record, I should say, that keeps saying this stuff. But I really think artificial intelligence is going to drive this next leg even higher.
I think you're 100% right, but I think the timeline is going to be a little bit more stretched out, just like the internet was.
Yeah. Okay. I mean, can you explain, like, get maybe some examples or some of your thinking behind this? Because I think it's a fascinating point. I really do.
I think you're right. Just it's going to take 10, 20 years, and we're going to see that play out through, not only through drone warfare defense, that's a whole nother separate conversation, but of what is going to play out over the next coming years. It won't be overnight. Like, there's so many people who are thrusting money into the market like they're expecting these kind of overnight returns in these things. There's going to be some sort of breakthrough in a chip for Micron and it's going to double again or something like that. Like, it will take, I think, unfolding of quite a few years, especially seeing as how we're getting alerted to all of the like chinks in the armor, right? Of, oh, hey, you don't have your own feedstock for oil to be able to make these things, or you don't have this own stuff, or you don't. We're seeing all the vulnerabilities in the fragility, the real brittleness of this market for people to understand just of, well, if we're so reliant on this international trade, which we had previously, and ever since we froze Russia's accounts, really, we've seen this whole risk off from the rest of the world, right? That's why so much of my portfolio is in mining, is because I expected that, hey, if we're going to get cut off from China, that's going to mean there's going to be an explosion in this other end of the market where it doesn't matter where it's coming from, whether it's Australia or Canada. Now, it turns out I was very wrong in the geopolitical aspect of that of, oh, hey, now we're pissed off with Canada and we've pissed off Canada in return and all these other things. Well, I didn't see these coming. These weren't quite what I was anticipating, but at least we've still got Australia as an ally in this thing. And Australia's like, well, we're selling iron ore in renminbi now. Holy shit. Like what people should be really looking at as if you were the US and you saw certain things like these happening, of going, man, we're in a really bad spot of who our allies are, what we have secured. If you saw the recent list of critical mineral stuff and who they have listed, I was like, wait, Brazil's on there. They're the B in the BRICS nations. Why is Brazil listed as the allies that we're going to be adding to our arsenal at the same time? They're also the people who are going to be opposing our money or monetary system. Those don't jive very well in my brain.
Yeah, no, you're absolutely right. I've seen in past chats and obviously in the Discord, you're yelling at the top of your lungs for tungsten. Can you expand on tungsten?
Oh, sure. Yeah. There's lots. I mean, I've been talking about Almonte and American Tungsten for quite some time. Lewis Black is the CEO of Almonte. He didn't want to have any ties with the government. Like, I don't know how much, granted, if you buy a stock and the US takes a 10% stake in it, it's going to double. Like MP went from 20 to 100 and then of course settled back down to around, 60 where it is now. But any of the time, whether it's Lithium Americas, whether it's MP, whether it's other stuff, hey, that's great for the stock, right? If you want to trade those pops and you can be able to time those, fantastic, all the more power to you. But what that means for your company in the long term is they just paid 10% for your share price and now have 100% of your company because the government is going to be able to bully you around. And so Almonte, Lewis Black, the CEO, was like, we don't want anything to do with that. We've got these other deals going on. Now, funny little bit about that is the U.S. has now done deals with Korea Zinc, which is who Almonte was doing their mines through over in Korea. So it's kind of no escaping it is when the American might wants to take it, they're going to find a way to do it. So even though Almonte had their agreement with Korea Zinc has an agreement with the United States. So more or less, the U.S. is going to be able to get its tentacles into what it wants to. We have had the biggest mafia since, a very, very long time. I want to call it pretty much since there were gold was separated, but I go back to gold a ton of times. But in terms of tungsten, in terms of being the hardest metal out there, in terms of where the price has gone, China's cut off of the supply of it. If you look up, rather than just where Almonte's year to date, or look up the 1 year of Almonte. Like if you go to that,
Jesus Christ,
Jesus
Christ,
and that's
hell.
How long I've been, pounding the table about these particular things. And then there are other ones that haven't quite done what Almonte has done, but of the deposits that they have, of where they're positioned. Like certain deposits in Idaho, that's where the other company, what is it, TUNGF for the ticker, American Tungsten. Most of the ones that I'm looking at, they'll have like a $50 fee for you. This one won't. But yeah, these are the ones that have deposits that have, I think, a lot more opportunity where you could still buy in. Now, what you're gauging against is everybody going to go ahead and say, I am a retail investor, I have no idea what the fuck I'm doing, I'm going to go ahead and just bet on the biggest tungsten company out there, which is going to be Almonte. So you're still probably going to see that double, but there are going to be other opportunities, I think, underneath the scenes. I mean, most people don't know United Antimony, UAME, right? That has a huge tungsten deposit, and it's not talked about because it's antimony in the name. It's not very well known about, but who are the ones that are already working with the government, already have approval, already have smelters for particular things? It's like, okay, I mean, you've seen the news recently with it. I think you even were the one who posted it about the new stuff with, like, there's so much more good to come, I think, down the road if you are one of those long-term thesis investors. Unfortunately, a lot of these revolve around war. So if you're betting on these companies doing good, antimony goes into every bullet. So kind of this is why guys like Frank Giustra, right? I really like him. I posted his little bit is when he liked my response or whatever. I was like, oh fuck, like, he responded. But he was like, we don't want a world where we have $10,000 gold because of what the significance of that's going to mean and what that's going to mean on the populace.
Man, that's crazy. That's a crazy thought. I never stopped to think about that because you have all these people calling for 10,000 gold, 8,000 gold, but that means monetary systems are completely screwed.
Yeah,
that means the United States
10,000.
Yeah, that means the United States is probably at $72 trillion in debt. You know, like that means World War III at that point. If gold were to reach that, that means that's World War III level stuff. Holy hell! Like I never really stopped to think about that. That is scary. That is paper gold is no point at that point.
Just watch gold's price throughout history and look when all the wars are.
Yep.
So the people aren't going, oh, hang on a second, that actually is really bad news. I mean, yeah, it's good for if you own gold for a time period, but there have been multiple times throughout history where gold lost all of its value, where people were going, hey, that's great and all, but can you eat it? There will come another time probably that ends up playing out. Now, for how long, I don't know, but I'm still
and for the audience, what I'm showing right now is XAUSD. So this is a gold to dollar ratio, and I mean you guys can see it for yourself, like how insane since 1833. Look at this. Then 74, I believe this is probably around the Vietnam War. Then you had 79, 80. This is probably I don't know what conflict. Oh no, this was oh man, I forget. This is it was when inflation was high. There was like an oil embargo, a huge crisis happening around this time. I can't remember the exact the name of that crisis, but yeah, it was around this time. And then yeah, here we can see 2008, 2009, great financial crisis, and then it just kind of lulled because interest rates were down near zero for pretty much 8 to 10 years. And then inflation started to hit us. COVID happened, the pandemic happened, we printed like crazy. And now here we are to present day. Like that is a wild chart, man. That is a wild chart. And Julio also says, or Julio says that the same thesis plays for Bitcoiners. I mean, yeah, absolutely. And I'm reading this. I'm almost finished with this book, but it's called Bitcoin 1 Million. And the author is Fred Krueger. So the author is Fred Krueger. Hold on a second. Let me see if I can pull it up. Let's see. Yeah. So I'm reading this book right now, or I should say I'm listening to this book on Audible, Bitcoin 1 Million. And he pulls up, it's crazy. So like Bitcoin and gold have the same exact theses, right? Pretty much identical theses, sound money thesis, right? Bitcoin is capped at 21 million. Gold is a scarce asset. It's just one is digital and the other one's physical, right? And the theses are the same exact conclusion that the monetary system is going to get so out of control. This is what's going to send Bitcoin up because it's a scarce asset. And, if anyone listens to Jordy Visser, he's saying that this theme for this year is to invest in scarcity, not invest in abundance.
One caveat
go ahead.
is just, if you don't hold it, you don't own it. You should really have I don't believe in, but I mean, I think I've been vocal enough about this, is I'm not really about any of the digital money stuff.
Yeah.
But at the same time, the people who I have listened to about it are like, man, you got to have it in a cold wallet. You can't have it in one of these other areas in which it is completely vulnerable, right? And I think I posted many a times about not Bitcoin, but XRP and these other massive thefts that go on because people have exposure out there digitally, which is why I mean, when I hold the silver that's on my desk in my hand, I'm like, I know that how much is this worth? I can literally look up online, see how much day by day, either the stack on my desk doesn't change in size, but of the valuation of what it's worth, I can go ahead and monitor that myself. Whereas, just of how much exposure there is online, I would highly advise people to go ahead and have a cold wallet or storage elsewhere.
And to add to that piece, you have to also be careful with where the cold storage or whatever is coming from, right? Whatever these storage wallets are, because there's been proof that some, like in the early days, they would send you the wallet with the passphrases. Right? Like nobody stopped to think about that. They're like, oh, I got a wallet and here's the passphrases to access the wallet, not knowing that on the other side, the people who manufactured the wallet had those passphrases.
Oh,
so
sure.
They would just wait. Yeah, they would just wait for you to upload your stuff and then they'd steal it, right?
There's a guy looking for his thumb drive for the last 12 years in a landfill because that had his now I'm sure that's the same story is played out where somebody's like, oh, I found gold coins in the trash because somebody had no idea they were worth value. So the exact same scenario can play out, I think, in Bitcoin.
But also some of these hardware wallets are being found to have keyloggers or spyware attached to them. So as soon as you connect it to a computer and you start typing, it's sending the information back to the manufacturer / the hackers. So again, I don't like, for me personally, and I fully let's see how I can phrase this. Like I fully respect the fact that iBit or BlackRock could potentially have a hack in the future, right? Maybe. I mean, I don't know.
There are Roombas that have connections to Chinese cloud servers, right?
Yeah.
So these things are going around cleaning your floor, yet at the same time, and they have visual capability. So there's things with visual capability that are busy transmitting that stuff back to a Chinese server to be able to say what your house looks like, what you have going on. And do they have a microphone with them? I don't know. I haven't broken them down to be able to find out. But just like how much more do people need to be able to go, maybe I should second guess everything that's going on with my investments and what I actually hold. Again, if you don't hold it, you don't own it kind of a mentality, and of know what you own, know what you have, because so many people have absolute shit stock that they're hoping that will recover eventually. I've seen so much opium out there, and the high yield, by the way, why is it called high yield if it doesn't return more than the market? I think that should be a very, very big asterisk next to any of it. If you call Murni high yield or Ulti high yield or whatever it is, to be able to say, well, what is the market return? What is that return? Well, then you can't call it high yield if it's returned less than the average. So all of these things should be immediately excommunicated from the high yield name. All that shit goes out the window as soon as it doesn't return as much as the market. So it just becomes a yield.
Yeah.
Right. And people can go, oh, wait a minute. I don't give a shit about that yield. I want a bigger yield. I want actual high yield. And then there will things that will be related to that when they actually do return a high enough of yield to be considered that.
Yep. It's funny. And I did this without even thinking. I just pulled up Yield Max because every time people go on these tangents about high yield and how much they suck, I immediately think of Yield Max. Like I don't hate yield, Max. You know, whatever. To me,
I
it's
do.
whatever. Like
I really
yeah, I know you do. I know Julio in the chat. I know he does for sure.
Well,
I know there's a lot of
hate's a strong word. I wouldn't say hate, but of the hoodwinking of the entire new investment community, of the false promises and other stuff of like that. It's real people's money. People go to work every day for this bullshit. Where do you want to be spending your life? Where do you want to be spending your time? And it isn't in having Jay on a yacht. I don't know, man. No, I'd like to see him on a yacht, but my yacht. Okay. I'd like to see everybody succeed, but at the same time, I don't want it to be through somebody else's nefarious activity.
So Sergio puts in the chat. So my TP link router is like a megaphone to threat actors. So I got an interesting story. This is a true story too. Back when I was working in the Middle East, in Iraq, we had gotten a alert that most of the routers on base, right, the civil that you could buy at the local shop or whatever, because people were spending money over there at the local shops, not the American PX, right? Because you could get some items that the PX did not have. So they were buying local routers, right? TP Links, Xiaomi or Huawei routers. And my friend who did cybersecurity at the time, he bought one and he was seeing where the data was flowing. As soon as he connected the router, there was all these links. There's all these I forget what they're called, tunnels that were opened through the firewall of that router, and they were all linking to IPs that were back in China, right? I was like, holy crap, that is actually kind of scary. And then no more than a couple of days later, some of the counter intel guys came to us and said, hey, you guys need to be aware that the Wi-Fi routers, right? The Wi-Fi routers that you're buying at that shop, the TP Links, all that stuff, the Xiaomi, the Huawei's, they all have spyware on them. And they all send all that data back to China, right? Which is absolutely scary, right?
Yeah,
scary. This is why I don't like Chinese products. I despise Chinese products for this fact. And like Samsung, I'm fine with holding. You know, like if I'm giving a gift, like a cell phone to a gift, you know, to somebody, they're gonna get Xiaomi or something, right? But what else happened? It's happening now because you have. And I hate to bring this into geopolitics, but you have China and Russia assisting Iran with their strikes, and their strikes are hitting hotel buildings where these, you know, U.S. personnel are staying. And what do you think? Either a cell phone that they're using or routers that they're using, or, you know, they're posting on Instagram like, hey, look where I'm at, guys. Like, this is, you know, this is a nice hotel. Like, I'm being put up, you know, for the war, blah, blah, blah. And then they're getting a hold of this information, and then they know exactly where to strike, which is absolutely insane that you know, that level of warfare, that detail, right? So it is crazy. And of course, Skeptic comes in with the skeptical the skeptical comment. Wait, the government spies on us? No, definitely not. You know, Edward Snowden, that never happened. That's totally fake. Anyways, I just wanted to cover that piece because that it is real. Like, it is a real thing. So, you know, when people make jokes like you know, like Sergio over here saying my TP link router is sending you know, info to threat actors, like, yes, it is absolutely 100% fact. So he also says, are you talking about the famous malicious USB that someone found in the Middle East with backdoor capabilities? No, that was again, funny enough, red team type of stuff. A UPS driver that didn't work for UPS would go into these corporate buildings and say, hey, I need to deliver a package. I need to update my delivery. Do you have a Wi-Fi connection I can use? Or do you have an Ethernet jack I can plug into? And then that's how these red team actors, bad actors that companies hire to basically pen test their company networks, they would hire them to do stuff like this, and people would fall for it all the time. It's absolutely insane what you know, what goes on in IT. Anyways, bringing this all back to investing. And I understand your points are well taken. Why you're, you know, hate's a strong word, but why you don't like high yield, and I totally get it. And you know, I'm actually in like one foot in the camp of, it's not so much that I'm anti high yield, but it's, you have to be careful with what you buy. Like you always say, you know what you own. I think it's prudent for investors to be very careful of what they buy when it comes to high yield products, because there's so many of them.
Call it what it is, right? That we have an inclusion every time that there's a new company into the NASDAQ, right? Well, that should be the same for high yield, is that if over the last quarter you've returned 8%, you get kicked out of the high yield club and you don't get called high yield. Like, let's just call things as they are. Call a spade a spade. It doesn't make any sense for people to be monkeying around with their money if the average investor doesn't spend more than 6 minutes before they make an investment, and that's at least what I've read, then let's go ahead and make that 6 minutes valuable and provide them with the most clear information possible in that 6 minutes. But if you're allowed to lie through every orifice possible, create a new one. In fact, it looks like what YieldMax has done with their Forex stuff or whatever. But it's just, it is unfortunate that there are people who are just getting into the market and they have no idea how to allocate their money. They want to be able to protect their capital. They realize the U.S. is printing off more than ever before. And they're like, hey, I'm watching all of the work that I've done for the last 20 years disintegrate. How do I protect that? And there are shills out there who are going to say, oh, you'll get 120%, blah, 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 blah. These people should be not burned at the stake, but everybody should get a toothpick and should be able to stab them very, like, this is going to kill them. But every investor should get one toothpick and just say, son of a bitch. Okay, there are 3,000 toothpicks in my ass now. I get it. I did wrong. I apologize. But that will never happen. People aren't held accountable. We're going to have bank buy-ins probably. Like in my, I don't know, negative scenario that I have the conversation in my head between the voices of, bear and bull, whatever, of saying, okay, what are the potential outcomes of this? We're going to see similar things to that, or where we have to have people held accountable. We're going to have maybe another Bear Stearns situation where even though they weren't the party that was responsible, they're going to go under. We're going to have, 7 bank choices go down to 6 bank choices, go down to 5 bank choices potentially, of who are the people who end up being the ones who are the bag holders in the end. And they go, it wasn't me. It doesn't matter. Like, if people aren't familiar with the wolf game, they should very much so familiarize themselves with that, in my opinion. When you understand what is the wolf game and why you will not win if you are not one of the informed, it plays out time and time again in the marketplace. And I wish people understood that the informed will win every time.
But listen, Victor, you're missing the whole point of these high yielding. I did my research. I watched the YouTube video and I read the Reddit post. This thing returns 120% money for life for the rest of your life. We're citizen of the year, man. We need citizen of the year to come on.
Okay, this is too much.
We
joke is a joke. You've gone too far, sir.
All right, man. Let me move on from this high yield stuff, man, because I could honestly go on about this stuff for a very long time. And listening to you rant about it is awesome. And we have Julio in the chat. On top of that, you have so and so cheerleading for Jay and yield trash. Well, I would I got to admit, going back, for those who don't know who Kamir is, he ran a YouTube channel. He runs a community. I'm not going to mention the community, but he runs a community. Nice guy. I think he is realizing, or he has already realized from some of the streams I did peek into that I, just spent a couple minutes watching. I think he started to realize how kind of bad YieldMax has been for his portfolio. But he still invests in high yield products from other fund managers. But yeah, I do think he's realizing it. And again, I mean, he's a nice guy. He means well. Unfortunately, that he has a bad reputation. It is unfortunate, but I mean, I listen to his streams from time to time, and I mean, he seems like just a normal dude, man. That's just trying to figure it out like the rest of everybody.
I think, unfortunately, his ego comes into play a little bit too much when it comes to investing, and he wants somebody to go ahead and tell him his believies are accurate, right? Just pet his ego a little bit and say, no, you're right. Every choice that you made initially was correct. Who doesn't want to hear that? But at the same time, that's not how life works. You should make mistakes. You should be bitten in the ass. And that's how you make yourself better, is realizing, oh, no, these are real problems. I need to address them. And that'll make you a better investor. Unfortunately, he's been used as, a counter indicator, is because all of a sudden his account's going to zero, and then the economy takes right back off. So it's one of the, like, okay, well, this is the indicator then that we're going to use, because once his account goes, ridiculous, that's what we're going to use to go ahead and buy in heavy. But yeah, April 7th or whatever, that was phenomenal for everybody who decided to go ahead and buy TQQQ.
Yeah, man. And holy hell. Like, I wish I knew as much as I do now. Because I did not know, enough about leverage funds and I don't want to say market timing, but, buying at peak fear, that kind of stuff. I didn't really fully understand that stuff when that happened, when Liberation Day 1.0 happened. And I wish I did. But
I would love
what's
about
what's really sorry to cut you off, but I want to make this point because it's so important, because everyone always looks at these high yield funds. It doesn't matter if it's Neos, Yield Max, Roundhill, doesn't matter who, right? But they always look at this and say, look how it recovered from Liberation Day. It's like, yeah, it recovered. The market went on this crazy bull run. Like, no duh, it recovered. Everything had a sharp V shape, right? Everything. Everyone's like, oh, look at Chippy, how fast it recovered. Like, yes, because the market went up like crazy, but in a sustained bear market, like we're sort of having now, I don't want to call it a bear market because it's not, but the volatility that we've been having, if it's a grind lower scenario for months at a time, it's going to destroy every high yield ETF. It doesn't matter if it's from Neos or Curve or whoever. Every high yield ETF is going to get smacked, and they're gonna have some type of damage. It doesn't matter if it's Chippy. It doesn't matter if it's whatever, T-SPY or SPY or QQQI. So I think people just need to fully appreciate that fact. Because again, there's a lot of people. I call it the cesspool of the cesspool of the internet. You have Reddit, you have YouTube, and you have X. Everyone's like, oh, look at how fast this recovered, right? Year to date, it's doing well. Well, that's because the damn underlier had a really nice sharp,
that's only the rim of the cesspool, but yeah, absolutely. Then you're hitting the nail on the head when you're talking about just how people will get misled of who are the new people in the marketplace and what it is out there in the ether. So many people will be led a lie, because that is exactly what is being projected out there by the majority of people. And that's herd mentality. That's exactly the type of thing that I want to avoid. I want to be a contrarian. I want to buy things when they're extremely hated, extremely low. That's why I've mentioned Rick Rule. That's why I mentioned so many of these other things, to say, hey, man, I want you and everybody else to think differently about their investments. I want people to buy hate and sell love.
That is a soundbite right there. That is dope. Say that one more time for the audience.
Buy hate and sell love.
Damn, that is awesome. I like that one. That is really good.
That's not me. That's Rick. I mean, if anybody not to, boost somebody else's stuff.
No, go ahead. I like Rick Rule, man. I've talked about him several times on this. As a matter of fact, I'm bringing him up now.
If you are interested in learning more, he has his own channel, right? His own website, the Rick Rule school. I don't know. I'm drawing a blank on it. I'm trying to think of it off the top of my head. But he has his own way of being able to, if you want to get into commodities, if you want to learn about natural resource stock investing, then the website, which he has, Rick Rule Investing, I think, or one of the, again, drawing a blank. Well, you're looking it up right now, and I'm on a tiny screen, so I can't.
I had to change because I have people
can't
calling
see
me a
any of
psyop.
that.
I have people calling me a psyop for YieldMax because I had YieldMax on the screen. I was listening to you talk. And I wasn't really paying attention to the screen. And people are like, oh, Eugene's a psyop for YieldMax. He's trying to get you to buy YieldMax. And then we have from Tradesman. It's good to see you, Tradesman. I haven't seen you in a bit, but he says they don't want you to be rich. Anyways, yes, I pulled up Rick Rule. I like Rick Rule. I've mentioned him several times on the channel because of you, right? You posting the interviews and things like that. Absolute Chad of a commodities expert. A guy is easy to listen to. He breaks things down super simply. And he talks about just all things, mining. He even said, and this is why I didn't buy something like a SIL J, which is a Silver Miners Junior. He says, I don't buy the morons. I buy the I forget what the exact quote was, but he's like, I don't buy the morons, which is, the juniors. He'd rather go for the more mature miners, something like in the silver miners ETF, like a SIL or something. But he also had because him and I hate to compare the two, but him and Saylor had kind of the same thought. There's too many damn tourists that come when the times are good, right? When gold is spiking like crazy, that's when all the tourists come. Or when all the people who love the narrative come in. And then when you have a drawdown, right, a severe drop like we just had with silver and with gold, then people hate the narrative all of a sudden and they get out. And then only for gold or silver to have this insane move up later on. And I think we're seeing that play out potentially here in over this year, where, yes, it has been a decent pullback for both metals, but eventually it's going to return some crazy number. But yeah, that was my thought. I just wanted to share that piece because, again, big fan of Rick Rule. Definitely like his videos, his interviews, really easy to listen to. I have no problems promoting this guy. But I'm sorry, Victor, not to cut you off. You had some thoughts you wanted to share?
Yeah, sorry, I was trying to look up the company right now. But so look for divergence. Look for things that don't align right now. So if you were to say, all right, most metals took a hit. Like if you look at the metals market recently, right, the past few days, they took a fairly sizable hit. But then look for the companies that rather than taking a hit, they went up. Look for the ones that, so Alaska Silver, for example, that would be one that, so if you say Alaska, yeah, okay. So, yeah, okay. You're doing it. Yeah. So yeah, do 5 day if you would.
Oh, damn.
And then one. Yeah, exactly. So we saw drawdowns, but why did this go ahead and go up? And then you can go ahead and go over the drill results, go ahead and look at the news that they're putting out. You don't have to do that right now, but if you want to look for investments that will pay, now, not saying buy it now because it just went up over a term when everything went down, right? So granted, there's divergence, but so just to pay attention to that and say, well, when do I want to be able to get into this? Will there be a correction along the line? Maybe there won't be a correction along the line. Maybe this is hey, they had a good enough of a report with the deposits that this is going to continue in an upward line. But that doesn't happen, right? Nothing goes up in a upright direction continuously forever. There is correction. Eventually, people take profit. There's market dynamics that take place. But there will be things like this. There will be other companies which T2 metals over the last month. If you look up T2 metals, or I'm trying to draw things from, I actually have to look them up now.
This penny stock, T2 metals?
Yeah.
Wow, 103%. It's Canadian on the Canadian market. Oh my God. 103%. The last one we looked at, which was Alaska Silver, for those who couldn't see it over the last 5 days, it spiked up 28%. In case you guys can't see that on the screen, listening on your phone or whatever.
But
Alaska Silver spiked up 28%.
That is when diesel prices are getting more expensive. That is when all of the asset prices for being able to do metallurgy are getting more expensive, yet the deposit is not. So that is actually a muted response. You're seeing a muted response in all of these stocks that are having really good returns. Right now, if you're paying attention to, I'm getting a little bit fervent, but if you pay attention to all the drill results that are coming out from these different companies, there are so many that have insane positive results, but you will not see them reflected in the share price. That's what to pay attention to.
Yeah. I just want to cover this real fast. We do have some breaking news. Always wanted to say that, but we do have some breaking news that there's going to be the largest there's going to be the largest bombing campaign ever on Iran this weekend or today, probably. So probably going to be even more volatility next week. All right. And that's coming from Scott Bessent, Secretary of Treasury Scott Bessent. So I'm trying to find an actual article on it that was coming from X. And I wouldn't be surprised if I got hoodwinked, and that doesn't even really exist, but it does. I did see other things for that. So let me see if I can find the actual article. Actually, yes, it is. And it's coming from Fox Business. So Treasury Secretary Scott Bessent. Oh my God, come on. Here we go. He forecasts the largest bombing campaign yet, says Iran's attempting economic chaos. And that was published a couple hours ago.
We need to get you a better pop-up blocker for this.
I know, man. This isn't even like, check this out. This is just Fox Business website being garbage. Like,
right? No,
I hate their website.
I'll send you a couple of different blockers where this hopefully won't be an issue when you pull stuff up in the future where you get 1, 2, 3 that you're having to close, or even just other nonsense. It'll just be non-existent. You'll get to actually read the article. Okay.
Yeah, I'll look for that. Yeah, because I hate Fox's website. It's so trash. It's absolutely garbage. That would, would definitely make sense because they just launched a bunch of missiles today, actually. And last night, Jordan was attacked. I believe Bahrain was hit again. So it would not be unfounded if something like this passes this weekend. And we'll see continued chaos going in the oil markets. We'll see continued chaos there. I really, really want to know what the hell gold is going to do. Like, I really, really want to know if this thing is going to continue climbing because of all the chaos that's happening, especially with oil. Okay, we'll look at one last stock before we end the stream because I have to close out. And I do appreciate you, Victor, for coming on and then kind of just dropping some knowledge bombs on us, and definitely appreciate the conversation because I think it's nice to hear from other people, obviously not just over Discord, but actually have a real conversation with people about all this investment stuff and sharing different philosophies. Because you brought up a lot of good points. You brought up like you need to know what you own. I think that's the biggest thing ever, is just knowing what you own. So we have a request from Super Straight Guy asking about WAMF stock. Don't know what it's Alaska Silver. All right, so we already covered Alaska Silver. But okay. Anyways, guys, Victor, absolute pleasure speaking with you today on this Friday. I hope you have a good weekend. Do you have any parting words before we cut the stream?
Yeah, make sure you electrify your fences for bears.
For those who don't get the reference, Victor has a couple beekeeping boxes over there.
Yeah, more than a few, but yeah. The bears went ahead and decided to tell me what kind of market it was.
Decided it was a bear market. I love the pun. And then there was actual drone attacks.
Well, no,
you were on fire with that. I like the pun.
They don't have stingers. Males don't have stingers, but they will let the ladies know to kick my ass. So they did.
So you did this stream with a bunch of venom coursing through your veins. All right. All right. Well, as always, appreciate everyone joining me for this stream. You know, I hope you guys found it valuable, had a lot of fun. Definitely a lot of information that was dumped, you know, regarding, you know, how to do your investing, not how to do your investing, but, you know, kind of some different philosophies on investing. We covered a bunch of different miners, and then how, you know, energy is going to impact or impacting the broader economy and the stock market as well. So we can continue to see some of that happening and playing out in the future. So as always, appreciate everybody. You guys have a great weekend. Go touch some grass. If it's snowing where you are, sucks to be you. Maybe go touch some snow as well. And with that, I will see you guys in probably a couple days. I will probably be out of Dodge, moving out and about. So I will try my best to get a stream going at some of the locations, but I cannot promise anything because taking my whole rig with me is adding extra poundage to my bags, which I definitely don't want, right? I'm already holding a bunch of bags in my portfolio, so don't want to keep weighing myself down. But anyways, guys, appreciate you guys. I will see you all in the next stream. Take care.
Take care.